Hey, what's up? Welcome to Degenerate. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so, this is overnight market prep for Memorial Day, getting ready for Tuesday, May 27th, after this nice long holiday weekend. Hopefully, you guys have had a nice weekend, enjoyed some grilling, some beers today. And yeah, so I'm just going to be going over the usual tickers here. I do have the chat hidden from me, but I will check it at the end of this. But I'm going to try to keep this stream to an hour just because there's some things I want to do before bed and also getting up early to look at the pre-market for myself. But yeah, in addition to the normal tickers, which are just going to be going over the volatility, the S&P 500, and Bitcoin and Ethereum, I will also be looking at uranium, including Oklo. I will also be looking at Big Bear AI, GameStop, and Peloton, which I actually did go over all of those in the options overview or options explorer video that I put out yesterday. But I will go over them briefly here before taking some requests. But yeah, just beginning with the UVIX. This is the 2x long VIX Futures ETF, which closed on Friday at a price of $35.32, being up nearly 13% on the day, pulling back about 1% in the after hours on Friday, but in the overnight, it's pulling back about 8%, and that's because we have seen that some of the negotiation tactics with the EU have kind of worked out. And so I think that, the EU is going to be working with Trump to try and seal a deal, although that deal has not been sealed yet. So maybe we see the volatility spike up over the course of the next week or into or over next weekend. But if we do zoom in on the chart here, we can see that the high on Friday, May 23rd, was at a price of $35.97, nearly getting to $36 a share, which is a level that I had talked about kind of corresponding with this light blue downtrending level that going back in time, that was, the resistance that we were trading within following this big move up where we topped out on August 5th, pulled back into that channel. And we did get a fake out break above it here, and then I would say a pretty big launch with that high on April 8th being at $105.18. But now having pulled back, we are back below that light blue downtrend that is acting as resistance. There is one thing that does stand out to me a little bit regarding the upside, which is this gap that has not yet been filled, which is at a price of $38.12. But if we do flip over to the VIX, which is the market volatility index, this did close, as you can see here, on Friday at 22.29, being up 9.9%. So being pretty similar to, although not as good as the upside for the UVIX, being up 13% here, just about 13%. But what we can see, looking at that gap here on the UVIX, is that the VIX filled the gap that corresponds with the closing price from May 9th. You can see that marked here was at a price of $21.90 right there. And so over here, that same exact day, that level is at 38.12 for the UVIX. So we have not yet filled that. But, this is an ETF that tracks the futures of the VIX, the index, with leverage. So lots of, stuff going on here. So I don't necessarily think this gap is going to get filled, or at least it may not get filled until maybe after the next, volatility event, which we might be cooling off from what we saw over the past week or two, going up from the lows here on May 13th at 26.23, going up to that high of nearly $36. And this is actually, for me, a little bit disappointing. My average, I think for 8 shares, so not a huge position, is 32.80. And if we do look over at the 10-minute time frame, we can see that, from the after hours Friday, it was trading up here around $35, right around this level. And then it just gapped down into the overnight trading right down to this level here around 32.26, currently trading at around 32.40. 42. So yeah, I mean, I don't know. I should have maybe trimmed at break even or a little bit of profit, maybe 5%. I did have a limit sell placed at 10% profit, or a limit trim, I should say, to sell the rest of my shares at 20% profit, but that did not get filled. So yeah, but I'm just going to be chilling, not necessarily looking to buy the dip or anything, just going to see what happens. And then kind of relating that over to the VIX, which I was just talking about regarding this gap, did close, like I said, at 22.29. No overnight trading data for this one, at least shown here in Webull, but I imagine that the futures for this pulling back and that we will see the VIX, ticker symbol VIX, trading below $20 a share starting Tuesday once the market opens. So yeah, I mean, I'd look for a pullback, maybe like 19, the consolidation highs over here. Maybe that starts to act as support. And thinking about that, looking at the UVIX, that consolidation high level would be right around $30 here. So maybe we pull back to 30. But currently, as I had pointed out on the 10-minute time scale, we are right around this white line here at 32.26, in the overnight at 32.42. So it will be very interesting to see where this opens up once the market opens in the morning. But then looking over at the SPY, this is the S&P 500 tracking ETF, which closed on Friday at a price of $579.11, being down about 0.68% on the day, continuing down 0.02% or 11 cents in the after hours on Friday. But then it does look like it is bouncing in the overnight, trading around $84.43, up about $5.30 from this close, being up about 1%. And so, looking at the chart here, also kind of considering this doodle, I was expecting it to pull back to potentially be testing 570. We got a low on Friday of 575.60. So did get into the 570s, but not quite to 570 or 568.70, which is this 236 Fibonacci retracement. And we just show from that low here, 481.80 up to the recent high of 595.54. That fib retracement in green, suggesting that 568.70, the 236, could be acting as support. But we also do have this gap down here right around 564, 565. That could be getting filled. So maybe if we do see a bounce, it's short-lived and we start to come down more, or we just don't make it down to that purple line as I have doodled out there, and we do see a bounce to kind of test that level around 589.32, which is that yellow horizontal line. I'm not exactly sure what that corresponds with. I imagine it is the low from May 20th, which is actually at 589.60, but maybe it's actually the low over here. The low was 589.28. So maybe I actually just want to move that level over. And so that is corresponding with the low from May 16th, which is at 589.28, not 32. So I am just going to adjust that there. So maybe we see some resistance around 590 somewhere around there. But yeah, considering this, looking at the pre-market or overnight data, really, let's look at that on the 10-minute time frame. So we can see that on Friday, we did kind of float up over the course of the day, but then did get rejected by this red line here at 581.68, pulling back into the after hours, holding that level, but then we do see this gap up above that red line in the overnight trading, having hit a high of 585.67 so far, but then it does look like it's cooling off a little bit, potentially to go higher, or maybe it does pull back to retest 581.68 before bouncing, or maybe it breaks down to, fill the gap. But if we do look at this on the daily time frame, that red line that I was talking about, 581.68 is right here. So we are above that, we are above that around 584 in the pre-market. And so that red line corresponds with the low from November 6th. Believe it or not, 581.68. Red line there did act as support over here. So I do think that it could be an important level, especially because that was, a nice level to be trading here. If you were to buy the test of this level and then, sell maybe the lows over here, the consolidation lows, we could see that would be a nice, let's see, 2, almost 3% swing. And that did happen, multiple times over here. So could have been a really nice level to be trading. Over here, it did break below it. Now we are below it again, but in the overnight, like I said, are above 581.68. So maybe that's an important level to be considering. And then now flipping over to the SPX just to see if there's anything that stands out that's a little bit different from the SPY. So the SPX is the S&P 500 index. So, that is what the SPY ETF is based on. And the SPX closed at $5,802.82, being down 0.67% versus the SPY being down 0.68%. And so this one did not get back to this purple level that I have marked here, nor did it get back to the 236 here at around $5,700. That is, of course, corresponding with the same retracement over here, but this I just have a nicer green color, it looks like. So maybe what I want to do is shift that from light blue to green there. And so those do match. And so I could see this pulling back to there, but with the SPY being up in the overnight trading, I expect the SPX to be up once the market opens. And maybe this means we're going to start to rally towards those all-time highs around $6,147. The high, it looks like it was that number plus 43 cents. So if we can get up to like 61.50, that would be new to all-time highs. So that would be pretty exciting. But also I think that there could be some surprise news around the corner, whether it's related to tariffs, whether it's related to Doge and the government and cuts and not cutting or whatever. There could be some volatility. Also, all the stuff going on in the world. So maybe this does come down to fill these gaps here. That would be around $5,659.91. So you could just say $5,660. Another gap down here and another one down here. So yeah, there is still some potential downside. We may not be in the clear just yet. So good to, be prepared for that, keeping an eye on that. But it does so far look like the markets are going to be rallying. However, though, if we do look over at Bitcoin, this is now trading around $108,000. And it does look like the candle so far for I guess today, the day is not over. They're a little bit wonky here in Webull. But maybe I'll switch over to TradingView in just a second because I have been going over the charts during Crypto Corner Stacker. I'd recommend checking that out if you are interested in crypto. But yeah, just looking at it over here, following this upside move to around 112, we have gotten a retest of 108, that being the top of this yellow rectangle that I had drawn here. And really, that pulling back to test that as support around 108. It looks like we've gotten some wick lows of around 106,600, somewhere around there. And, just corresponding with the tops over here, the consolidation highs, pulling back, retesting that as support. And so, if we just look at the chart here over time, following the lows that were hit on, April 7th, when that was, kind of the bottom around the Liberation Day, we have moved up, consolidated, formed a bull flag, moved up, consolidated, formed a bull flag, and then matching pretty well with this 2-week box that I have drawn here, consolidated before breaking out. And now we're just consolidating again. So maybe we see another couple weeks before going up to around 114, 115. maybe testing that as resistance. And I also should note that the Bitcoin conference in Las Vegas is this week. So maybe there will be some sell-offs corresponding with that. If a lot of big money, a lot of big players are, occupied with the conference, maybe they're not going to be buying dips. And so maybe we see this sell off a little bit. But if that's what people are expecting, maybe that is not what is going to be happening. And so, yeah, here's the Bitcoin chart that I went over on Saturday. Do have this little doodle suggesting that there could be a pullback to around 105. And so that's kind of what I'm hoping for. I do have, in addition to my daily DCAs, I do have a dip by order placed at 105. But I don't necessarily expect that to get filled, and it's really not that big of an order. It's half of my daily DCA buys, so I'd basically just reassess if that does get filled if I see Bitcoin trading below 105. But yeah, we are right around 108, so not looking too bad over there. Just, consolidating here before we break above that uptrend, and so that orange line goes back to based on the pivot points that I've drawn here, the highs from December of 2017, as well as the highs from 2021, also intersecting with the highs over here this was 2021. These were 2021 as well. So yeah, the double top there, or quadruple top kind of, in 2021. So yeah, I think that we are kind of, or have been, we did get rejected from that orange line, but then we do have this red line up here. I drew that just kind of thinking, about that, 115 level, 114, somewhere around there. That is based on the pivot high from, November 10th of 2021, and then the other pivot point being right around December 18th of 2024. And so that just gives, a little bit of wiggle room that there could still be some more upside before some resistance, and maybe we'd really have to consolidate below both of those levels to be breaking higher. So good to keep that in mind. But then now let's just look over ETH real quick. Currently trading around $2,500. Did consolidate for about 2 weeks in this box that I have drawn here, but it hasn't really broken above it like the Bitcoin price action has. But maybe that's just because I drew this box down here to be not that thick, whereas the Ethereum one is a little bit thicker. But we do kind of see a double top here, and with that being said, well, there's the higher high over here. These are lower highs. We do see lower highs in the RSI. So I actually think that looks pretty good, that this could be, cooling off before starting to make the next move up. The RSI looks like it's around 59.55. Also, let's check that out with Bitcoin. Here around 64.27. So both of them are below 70. So I think there was some, needed cool off in, these top two cryptos, but also I imagine in the broader sector. But yeah, I'm just going to pull up the Ethereum chart over here just in case there's something that I want to mention that I went over during Crypto Corner. But really, I've just been doing these like Fibonacci retracements that, the possibility of it coming down to like 2,200, somewhere around there. But really, personally, I am eyeing this level here, which is around $2,320, so I'll say it, $2,321.58 based on the Coinbase data here, looking in TradingView. That was the low from May 18th. So I'm just going to, actually, it wasn't that level. Oh, yep. Weird. This number just adjusted. I feel like I was just reading a different number. But anyways, that level is $2,323, so 2323. That was the low. That was hit on May 18th. Maybe I imagined reading a different number. Maybe I was reading the one over here. I'm not sure. Sorry about that confusion. But yeah, I feel like maybe we could be getting a sweep of those lows, or maybe a retest, a near test of that level before it does go higher. And the idea behind that is if people look at the chart and say, hey, there's double top here, RSI, it does look like it's cooling off, like I was just talking about, so that does seem pretty good. But volume on this test of the highs over here was actually, yeah, I mean, it was lower. I mean, really, actually, no, when we were hitting those highs, it's about the same. But maybe people see this volume and say, oh, it's lower, it's weaker. I'm going to short it. I don't think it's going up. And then, or people get overly confident that it is going to go up. And then to sweep out people that get overly leveraged long, draw this down, then those people see, hey, there's a double top there. I think it's going to keep going lower. And then it launches higher, just shaking out people that are long and short. So I could see this coming down to around 2,500. I'd be happy to add more down there. And if it does continue going lower, then I just kind of reassess, especially with the Bitcoin conference. Cryptos could be chilling out over the course of the week, especially Ethereum. If Bitcoin is dumping, I think Ethereum definitely would be. But maybe there's a switch there and Ethereum starts to go higher. Who knows? But with that being said, I am going to switch over to the tickers on the list here, and then I'll open up the chat for requests. But yeah, I mean, I have a lot of clutter here on the ticker symbol URA, which is the Global X Uranium ETF, closed on Friday at 31.83. I had been talking about $28 being kind of, an important level over here, and we gapped up. We actually did fill this gap here at $30.53. I'm going to make that line solid. And yeah, I mean, that gap was formed based on the closing price from January 24th, closed at $30.53. So see that mark there. That also corresponds with Fibonacci level from the retracement going from the top here at 33.09 down to the low here of 1950. And, with that being said, I can probably remove this 618 because we have gone past that level. And then just, an attempt to kind of clear up some of the clutter here. Let's see, I do have this, where is it? This red Fibonacci extension suggesting price could be getting to around 30, 34. Really, they're just being a confluence of levels here. But yeah, I mean, what I might do is I might remove that 100% just because potentially, we're already there and we just don't need the clutter on the chart. But I might add the 1618 just to see where that is. Maybe that would be suggesting that price could be going higher, which would be bringing price to around 37.05. The 52-week high was 33.09. So, maybe we're looking at new 52-week highs there. And then also I do have, this fib level here, the 786. So, we are trading above all of those levels. Very nice big green candle with this large volume behind it. So, I think really what we're just going to have to see is how does this play around 30, around this yellow downtrend, which, let's see, is this parallel channel, but that is just based on the highs over here. So it looks like actually the open price from October 21st, the open price from October 21st, as well as the open price from November 22nd. So those two levels, that's how you get that trend line. We have not yet pierced that downtrend. So the high, actually, wait a second. Maybe we have. We're above it. I was looking at this candle here from January 24th, where we hit a high of 31.60, nearly got to that downtrend, but didn't get to it. But on Friday over here, we did close at 32, or we did hit a high of 32.05, but closed just below 32 at 31.83, but it is above 32 around 32.50 in the overnight trading. If we do look at that price action there, but this actually looks pretty healthy because, there's a little bit of a gap that was left behind there, but this did have a move up to consolidation, hitting a high during the overnight hours at 32.90. So very exciting to see this one. But for me personally, I did not establish a position in URA. Maybe I should have, but what I instead did is I got and trimmed over here, but I'm still holding one share, so not too exciting. But still, it's something of Oklo. And so Oklo closed on Friday at a price of $48.87, being up 23 0.04% on the day, or just over $9. In the after hours, it did pull back below 48, but now it's trading in the 50s overnight. Let's look at that 10-minute time frame. Currently, it's at 50.15, but did hit a high in the overnight. Right when it opened, we see this 6.26% move in this one candle here, hitting a high of 51.09, then pulling back, consolidating a little bit here. So maybe, this is a bull flag, and this is going to continue to go higher. And so for me, for myself, that one share that I have, in all honesty, pretty lame, but just trying to manage risk. And, I'm happy to still be holding. My average is sub 28, but it's not sub 27. I believe my average is 28. I have no idea what the change is. Sorry, 27 and some change. I have no idea what the change is, though. I previously had a stop loss at 28, but I thought, well, maybe we could have some fun here. The all-time highs over here were at 59.14, hit on February 7th. And so maybe we could be getting up to test 59, maybe getting into the 60s. But what I did, I think I have to adjust the axis here. I did a Fibonacci extension, so going from the low of 535 up to that high of 59.14, and then down to the recent low of 1747. And so let's just see, 535. Oh, I do not have this lined up correctly. I'm just going to move that over. And 59.14, the low. Yeah, what happened here? Have to move this over. Just making sure that is correct. Now 14, 17, 42, I believe that was the low over here. Yep. And so, yeah, those levels are marked correctly. And that would be suggesting a move up to around 71.21. But I thought I had another one up here. Yeah, around 104. So actually, I'm just going to do some undos to see. Okay, actually, I'm going to redo those. So hopefully that's locked into place. Yeah, 71.21. So I do believe I had, or I have, a limit sell order placed at the top there, but I'm just going to look at it on my phone. And let's see. I have to, since it's off the chart, I have to do this. And so I have a limit sell placed at 82.56. I don't really know why I have it at 82.56. Why is that? So yeah, 82.56. I don't know. Maybe I'll just leave that because I feel like there's a reason for it. But yeah, I don't know why. That's kind of puzzling. But yeah, 82.56, weird. Oh, maybe it's a percentage move to the upside, thinking that, maybe it'll go past 71.21, but not all the way up to 104, and also getting people to think, oh, it's getting close to 100, it's going to get there, but then it doesn't actually get there. So yeah, I think that's maybe a 4x from my average, so 82.56, but that doesn't really make sense. Maybe it's a 3x. I'm not really sure. But yeah, maybe what I want to do is place an alert there at 71.21, just to, keep an eye on it a little bit closer. If price does get up there and it starts to look weaker, maybe the order will not get filled at 82.56. And like I said, that is just a sell order for one share, nothing too exciting, But yeah, let's continue on to the next one on the list, which is going to be Big Bear AI. This is one that I was previously holding. I did trim effectively at break even after having taken some profits on a call position, and Big Bear AI, which is ticker symbol BBAI, closed on Friday at a price of $3.64, down about 4.71% on the day, bouncing a little bit in the after hours, and it doesn't look like it's traded in the overnight session, or at least I don't have that data. And so, yeah, I mean, we can look at the chart here and see this uptrending level. Potentially at that could be acting as support. And also there is kind of, this left shoulder here coming to this armpit, inverse head here, right shoulder here. Got a little bit of a breakout, but then rejection consolidating here. I think that this could be moving higher. And the options data that I did go over does kind of suggest that. Excuse me. So I feel pretty good about Big Bear AI, but I don't currently have a position in it. I'm kind of intrigued to reestablish the contract that I had, which if we do look over at the contracts that I keep track of, Big Bear AI is not on that list anymore. So I'm not really sure which one it is without looking over at the contracts that I'm keeping track of. That's the $10 call for January 16th. We can see that the net call premium did go up there by about $600,000, which is not a huge amount of money, but with the stock trading sub $4, that's a pretty good amount of premium, over $500,000. So yeah, I mean, I'm very intrigued by Big Bear AI because the chart looks good and because the options data does suggest that it looks like it could be flipping bullish. And speaking of bullish, let's look over at GameStop here. Closed on Friday above $33, which if we do look over at the max pain for GameStop on the 23rd, max pain was $28.50. So we closed multiple strikes above max pain. So $28.50, I believe it goes in 50-cent increments. So we can actually look over at the options table here. So this is for May 30th, but so $28.50, we closed 1, 2, 3, 4, 5, 6, 7, 8, above 9 strikes above the max pain. Or 8 or 9 maybe. I forgot. I'm not going to count them again, but yeah. We closed pretty good for GameStop, so looking really good there, having hit a high on Friday of 33.21. And in the overnight trading, it is up about 2.5%, trading just below $34 a share. If I do flip over to the 10-minute time frame, we can see this nice, big, beautiful candle here, hitting high of $34.50 before consolidating a little bit, pulling back a little bit. That could be a bull flag, and this does break higher to the upside once the market opens, or maybe continuing into the overnight or in the pre-market. But what I could see with this, what I am preparing myself for is, in all honesty, I was holding a lot of GameStop calls that expire in June, and they were the $80 strike contracts. I personally don't think that GameStop will be closing on June 20th at or above $80 a share. I could be wrong about that, but just trying to manage risk with options contracts. And so I exited the majority of my position in this on Friday, effectively at break even, but did sell some at a loss over the past week or two. Did sell some at, I believe, a 20% profit at 84 cents, because my average is 70 cents. But I'm just holding one contract, and I'm just planning on continuing to hold it because I do think we could see some more bullish moves to the upside. I just don't think it's worth the risk of holding a number of contracts, especially with the expiration being less than a month away, as I have had some contracts recently expire worthless, and I just don't want to be getting in the habit of doing that. I think it's a little too risky. And so for me, what I'm doing with GameStop, rather than FOMOing into calls or contracts, whatever, I decided that, I'm just going to buy back on dips. So if GameStop does pull back to 32, I'll add a little bit. If it pulls back to 31 or maybe right around 30, I'd be happy to add some there. Also 29, do have this yellow line here that corresponds with the closing price from Valentine's Day at $27. Is that right? No. Yes, 27. That's the close. But the open, sorry, that's what I meant to say, was $28.90. That's the yellow line. Did get rejected here. did consolidate below it here. So I do think there's a possibility that there is some effort to drag the stock price of GameStop down, especially to around max pain, which if we notice for this coming Friday, the 30th, only 4 days this week, max pain is 27.50, so considerably lower than where it's currently at. And then the following 2 weeks, and for the monthly contract expiration of June 20th, max pain is only $24 then. The 2 weeks prior is 27. So we are well above all of these max pains. It does seem like we're experiencing a gamma squeeze and or ramp. But like I said, if there is some effort to bring the stock price down, if it's staying above those max pains, I think we're just going to see a continuation of this gamma ramp, as far as I understand it, pushing the price higher. So for me, I will be adding shares on the dips, on the pullbacks, but nothing too crazy and not going into contracts because, yeah, I feel really good about GameStop, especially if they announce that they did buy Bitcoin on the dips over here. So actually, that would be over here, May 7th. I'm not exactly sure when the Liberation Day was. That was April 7th. So that would have been, yeah, right around here. So if GameStop was buying Bitcoin while it was lower than it currently is, which is, like I said, around 108, 109,000 right now, I think that would just be really great. So I'm really excited about GameStop, but not necessarily to risk doing contracts, because maybe with price being up, there's an announcement of some dilution or some raising of capital to buy more Bitcoin. And if the stock price pulls back, I don't want those contracts to then expire worthless. So good to be cautious of that with contracts, but any dips, maybe on some news like that, I really like GameStop a lot. It's really transformed. I think it's a great evolution of the meme stock into the Bitcoin holding, treasury holding company, or whatever you'd refer that to, as. But yeah, let's see. The last one on the list that I have here is going to be Peloton, ticker symbol PTON. I did go over this in the Options Explorer video, so make sure you check that out. You can just scroll through it until you do see Peloton. I did put in the description of that video the order of the tickers that I went over them. But yeah, it did close on Friday at 7.57, being up nearly 5% on the day, going up 2 cents in the after hours, and then going up about 23 cents or 3% in the overnight, currently trading around 7.80. The high on Friday was 7.60. And I think that this is just looking really, really good. But my analysis is really not based on the data over here. In Webull, my analysis is, let's see, I'm just going to pull it up over here, is based on the chart in TradingView. So I had just noticed this inverse head and shoulders pattern, and what put Peloton on my radar was the Bronx Viking on X posting that there was some unusual options activity, lots of calls being bought. So I decided to look into the chart, saw this inverse head and shoulders pattern, looked really good to me. And also, you might notice this big green triangle here. That is actually the right shoulder of a bigger inverse head and shoulders pattern. So I feel like Peloton could definitely be making a move up to around $10 a share, marked by that orange line there. And so that's actually the contract that I did pick up. If we look over here, we can see the Peloton $10 call that expires in January. So 234 days between now and expiration. I just like to have some wiggle room because I'm not that experienced with contracts. And so that just gives me a little bit of a buffer, but the $10 strike, that seems very feasible to me. But I should note that the low on Friday was $1.03. So that times 100 shares per contract is $103. And my average, just for one contract, having fun with it though, 75 cents. I am looking for, I believe, this to get up to around $300. So if we do look back on the premium here, let's see, going back 60 days, it wasn't up at 300 or $3. If we do go back 90 days, we can see that it did have kind of a pivot high here, right around $3. So I think I have a limit sell at $3. Maybe it's a little bit lower. I'm not sure. But yeah, I'm just going to kind of be hanging on to that. If maybe something changes, things start to cool off, I will probably offload that contract to capitalize on that really nice swing. So I have to give a big shout out to the Bronx Viking for putting it on my radar, talking about the data here from Unusual Whales. And so just looking at the data from Friday over here, so from the 23rd, we can see that the stock price in yellow was going up. And with that, we can see in green, the net call premium was going up, which ended the day up over $1 million, whereas net put premium went up about $250,000. And so that's just that red line there. So not as impressive as far as the puts go. So that does mean that this is looking overall more bullish. And if we do look back over the past week, we can actually see that the volume, or the net call premium, I should say, that we saw on Friday. Also the volume, which you can't see because I'm in the way, but just the volume here on Friday was pretty low relative to what we saw over here on the, I believe that's May 20th. And so if I bring myself back, we can just look over here. So that was, on the 20th, we saw net call premium going up by over $3 million. So just looking really good. Stock price has gone up following that. So at this point, it is kind of risky. But just looking at the chart, over here, $10 seems like a pretty reasonable target between now and January. So not overnight. But yeah, this could potentially be squeezing and then getting up there really fast. So I'm just excited about that contract. And I do have a couple shares, maybe 3 shares, nothing too crazy, just so I can hold on for fun. It looks like I have 2 shares at an average price of $6.60. Just having fun with them. No worries there. But yeah, because I would want to sell that call contract before I sell those shares, trying to get better at practicing that. Because if I'm holding a call contract and I have shares and I sell those shares, that's kind of suggesting that I don't think price is going to go higher if I'm selling the shares. But why am I holding a call contract if I think that the price is not going to go higher? If I want to take the risk off the table, I should sell the contract. So that's kind of why I'm doing a little bit of shares, very small position, very small one contract in Peloton. But yeah, that is it for the list. So I'm going to open up the chat in case there are some requests. And so, let's just see what's going on. So it looks like a lot of activity there. And so, yeah, Saul, happy Memorial Day. Cheers to you. I do have a little beverage here from, I was grilling a little bit earlier. And and so you were saying something about ChargePoint. There was somebody on, I forget his name exactly, but somebody on X that's just like really disappointed that I haven't been covering ChargePoint, or at least I didn't cover it in the options data. The options data on ChargePoint is just really not that exciting because it's below $1. It did close above max pain, which was 50 cents on Friday, but it closed at like 72 cents, somewhere around there, 73 cents. I can pull up the chart in a second, but it's not like strikes above the max pain. And so that's really how you get a gamma squeeze to be going on. If it's just, cents above a max pain, 10, 20 cents, whatever, above max pain, that's not really going to trigger anything. And then the max pain for this upcoming week is $1. And so just to kind of summarize this, so I, as you know, have exited my ChargePoint position. That's just because I see that a reverse split is inevitable. And so just here in summary, I say my thoughts on ChargePoint because I was responding to Marinelli, I think Alex. He was just really disappointed in my sentiment around ChargePoint. I'm just trying to manage risk for myself. I think that there is some upside potential. Grok would agree that there's some upside potential. And so here I say, in short, I think it could be going to $1 in the coming weeks to months, but that it will be trading lower in August because that is when they would get they would be non-compliant. If by August 19th, they're still trading below $1, 30 consecutive days below $1, they're not compliant. So they have to get the price above $1 for 30 consecutive closes. And I don't really feel like that's going to be happening, or if it does, maybe it happens on a squeeze and then it's not sustained. So I'm not counting on it breaking above resistance just because of that reverse split possibility. And so I just continue on here. Well, $1 is a 2x from the lows, which is around 51 cents, I believe, and 40% above the current price. 70 cents, or right around 70 cents, is 40% above the lows, which is better than being below them in 6 months, which is 30% below current price. So maybe that's a lot of numbers there. Maybe it's not really that interesting. But my thought process is I see a lot of things in ChargePoint that kind of remind me of other stocks, whether they got delisted because of bankruptcy or they're still being traded, but following a reverse split, they did come down. So I feel like ChargePoint could be coming down some more. And but I do think that it could be going up higher. So this is kind of a breakdown. If you've got X, you can check out what I said over there. But I did ask Grok based on this image from TradingView. And if I do remove myself, we can see that volume over here has been lower than it was over here. So that is a suggestion that there is accumulation going on, that this lower volume is a sign that this is accumulation. It's not distribution. And then we do see the increase in volume here as this is starting to break above. This line marks the closing price on Friday, but that line, was resistance over here, nearly got to that level, was resistance over here. So it seems to me like we're kind of at this very pivotal level that it could be breaking out, but I'm not completely convinced. And I have to say, I do think that the ChargePoint chart does look better than the plug power chart. And that's really just because of the lower volume over here. And so I sent this image to Grok for Grok to analyze. And so this is kind of the conclusion that Grok had. And this was based on me sending Grok that image, asking him if he thought it was bearish or bullish, and then I had him do the deep think or to think to consider it based on the Wyckoff methodology. And so based on the Wyckoff methodology, the chart is more likely in an accumulation phase. So I asked specifically whether it's accumulation or distribution. And so these are the reasons why. And so the price stabilized after a downtrend with reduced volume during consolidation. So we can see that over here. Volume was coming down, and then with this consolidation over here, volume was pretty low. So that looks good as far as accumulation goes, consistent with accumulation, as Grok says. So the recent breakout above the consolidation range with increased volume suggests the start of a markup phase, a natural progression from accumulation. However, my concerns with that is that this volume here is not really that exceptional. It's not like it was over here. And we are effectively, as you can see based on that line going crossed, we are at some resistance there, potentially, not necessarily above it. So I have some concerns about that. But maybe that's my bias because I exited my position. But then so Grok continues on. Possible springs during consolidation indicate buying interest, while the lack of upthrust determines the distribution hypothesis, undermines the distribution hypothesis. So this does suggest that, this is in a healthy manner moving up, and then it could start to break out. So I do think that this looks potentially very good, but the duration of the consolidation aligns with typical accumulation patterns. And so Grok, to confirm this analysis, watch for sustained price increases above the consolidation range. So I would say that is sustained prices above about 70 cents. That is what you want to be looking for. Higher volume on up days and lower volume on down days. So let's consider that. So maybe this is a little bit concerning. So we do see this big spike in volume here, the red bar there. That corresponds with a wick up and rejection. So that to me suggests some selling up there. And then we see volume go down just a tiny bit, not that notable, but tiny bit. the volumes come down, and then we did push up, but not getting above that wick high from, I guess that would be Wednesday. And then we did see this diminish in volume on Friday. That could just be because it's before a holiday weekend. We did hold above, this level here. But we haven't been able to get closes above the past few days' highs. So maybe there's some concern with that. But again, that could also just be my bias. And then so the price holding above key support levels is important. And so in summary, the evidence points to accumulation rather than distribution, with the recent price action suggesting a potential shift into a markup phase. However, I would counter Grok with that ChargePoint received a non-compliance notice in February and has to maintain a closing share bid price above $1 for 30 consecutive days to regain compliance. And that date is by August 19th. And so I suspect with earnings coming up, we can see that just behind me here, the little E there. I believe that's on June 6th, but I might be mistaken. If ChargePoint or right around earnings, I could see ChargePoint announcing that there will be some decision on a reverse split, or that will be in effect at some point in the future. To me, that seems inevitable. And so I think with that, price will trade lower. And so I, didn't want to bias Grok. I included some of my analysis over here, which is really just like, ChargePoint has been trading in this range, which got me to think more about this in a Wyckoffean kind of frame, which I'm really not that great at. I'm still learning it. Like Grok suggested, and as I have pointed out, this lower volume here does suggest that this is accumulation. But for me, for my risk management, I had decided back here that I wanted to exit my ChargePoint position because I'd rather consolidate my EV holdings basically to Tesla, or just have some cash on the side, not be spread so thin. But I didn't exit here. And so while it pulled back about a month past, 3 weeks, whatever it is, and getting back to 70 cents. And so it's like, I wasted some time not getting out here. I'm just going to get out here. That's a decision I made. Maybe I'm wrong. I hope that I'm wrong, because Saul, I want you to make money on this. Alex, I believe is his name, on X. I want you guys to make money on this. And I do believe in EV charging. I just feel like we're in a pretty volatile market, and stocks trading below $1, pretty risky, especially when they have a non-compliance notice. So what I feel like could happen, effectively did happen, is this yellow arrow, a little bit of a dip, didn't go as low as I had suggested, which would be like the midpoint of this channel, and then a bounce. And so we're still, at the top side of that range. So right now, it's at resistance. It's not above resistance. It hasn't confirmed above resistance, which would be a close above this level. And then a secondary close above that day's high. And we have not seen that. So there's no confirmation that this is breaking out. It just seems like it based on the chart. But if it does break out, I could see it go up like this green arrow suggests to around $1 share, as I have noticed stocks that are dealing with the issue of non-compliance, like Nikola has done this, which stands out to me, but others have done this, that they get moves up to $1. I think it's possible Plug may have recently had that happen. I believe it was Plug. They move up for a day or two, like towards the end of the month, but then they pull back. So, I could see ChargePoint moving up this week to around $1. But if that does happen, I think that could be creating exit liquidity for those who expect, a reverse split. I expect a reverse split. I'm not shorting ChargePoint, but maybe actually if it does go up to $1, maybe I'd consider buying some puts. Not that I'm bearish or anything, or, have I'm a bear, I'm a bull, anything like that. Just kind of like exercising this thesis. And if it does go up, I would think that that would be prior to the announcement of that there's going to be a reverse split, and then it could come back down. So I think it's very risky. Grok, from Grok's analysis, Grok is not aware that ChargePoint is not compliant. I didn't include any detail about it being below $1, nothing like that, just looking at the candles. And then so kind of this like most bearish scenario that I have is that it breaks below here, retests that midpoint, gets rejected from there, and then comes down. So that's like the worst case scenario. I mean, what could happen is it goes up to $1. I feel like that would be creating exit liquidity, so I would be cautious of that. I'm missing out on 40% move apparently, but that's no big deal. I'm able to focus in other areas, so that's fine. I do think that this is good exercise for me. But if it does go up there and it does pull back, it could end up consolidating back in this range again. But one thing that does stand out that I did add to what I went over in the last video is this downtrend here. So it does look like ChargePoint has broken out from above that, tested it. So that does look good. But again, there is that, potential, that possibility for a reverse split, which to me seems inevitable. So if this runs up to $1, if it runs up to $1.50 between now and August, I mean, if it's trading above $1 for 30 days, then they don't need to do a reverse split. But if it squeezes up to 150 and doesn't hold above $1 for 30 days, they still are not compliant. So at this point, for me, I just think it's risky, and I'd rather be honest about that and be transparent about that because, I've experienced Fisker and all of these things where, BKHD, whatever his initials are, I forget his name, but he did a video on Fisker just like trashing the car. That would have been a great time to exit. And, instead, I lost a good amount of money on that. I would have lost a good amount of money had I sold then, but yeah, not saying that I think ChargePoint's going to zero. I have no idea. I just think that with the looming reverse split and it being at, in my view, resistance, maybe it's flipped to support considering this breakout from the downtrend. If it does go to $1 though, I think that could be creating exit liquidity. So that's kind of my thesis there. So Saul, I hope that's helpful. I'm sorry to be like super bearish on it or whatever, but I'm just sharing my perspective. And it's also because, I need to be shorter time frame. And so ChargePoint a year from now could be at, $10, who knows? But between now and August or into the fall, I think that ChargePoint's going to be lower than 70 cents, which would be adjusted following a reverse split in my view. So it would actually be above 70 cents, but not adjusting it, it would be lower than where it's currently at. But yeah, I mean, we'll be able to see. Maybe I'm wrong. I'm glad to follow up on that analysis. And, maybe now I don't have as much of a bias. But for me, it's like, it doesn't matter if this looks like accumulation. Earnings coming up here. What day is this? June 4th. We have this date over here, August 19th. That's when they will be non-compliant if they're still below $1. And I think that just for, a stock to trade in a healthy manner, it's too risky around that $1. Even if it goes up to $1 for a few days, goes up to $1.50 for a few days, it's still, in my view, pretty risky. So yeah, and let's see. I'm just going to catch up on the other stuff there. So I will include ChargePoint on this. I'll just include that in the description. There's no overnight trading for ChargePoint, it looks like. So I don't really have anything to add on this over here. I mean, there is a gap to the downside here at like 62 cents. So yeah, I mean, I just think that right now where it's at around 70 cents, it's kind of risky because it, in my view, is at resistance, not at support. The structure overall looks like accumulation, but with that reverse split, that accumulation could lead to a quick move up to 1. I think it would be dangerous to chase that because I think it could be dumped, exit liquidity, creating some bag holders up there. So those who are aware of a potential reverse split or expect it like I do, offload up there, and then it pulls back. Gap down here at 62 cents or 61.98. So something to keep in mind there. But yeah, Saul also requested BAH, which is Booz Allen Hamilton Holding Corporation. I'm not familiar with that one. I'll add it up there. And let's see, Chestad, what's up? How's it going? If I have time, could I please take a look at Oscar Health, which is ticker symbol OSCR. Yeah, I should be able to do that. It's getting to the hour, but I'll go through the chat right now and add all of the tickers, and then I won't take any more requests after that. So Saul is saying, love my Big Bear AI. Got 2,800, over 2,800 shares at 331. So let's just take a quick look at that just to celebrate his winnings. So it's currently at 331. Yeah, now if you're on X, I'd encourage you to follow Mr. Chart Norris. He's Klovov, I'm not sure. Kolov, I don't know what his name is. I think he's Polish. I'm not sure. But this is his account. I think that he's really great. He does post a lot on Big Bear AI. I had kind of bought a while ago, and then he started posting about it, or was posting about it, and I wasn't really aware. And it just gave me a little bit more confidence in my trade. So I'm not currently in it, but I want to wake up early before work to see where is it trading at. Maybe I want to buy some contracts. And the contracts that I was holding, I don't think I'm going to have it on the list here. But let's see. To pull it up, the contracts here, I was holding the $10 call that expires in January. I guess that seems to be kind of a popular one for me, $10 strike for Big Bear AI as well as Peloton expiring in January. So yeah, I might pick up some of those contracts tomorrow. Risky because they're contracts, but I won't hold forever given that they're contracts. I'll take profits soon. Whether that's 20% or more than that, I have no idea. But yeah, I think Big Bear AI could be heading up to like around $5 here, this red line corresponding with the highs from, it looks like March of 2024. So yeah, maybe heading up to $5. So a pretty cool chart over there. And let's see. Sandy Smith, what's up? How's it going? Hey, everybody, is what she's saying. Lazy One is saying, I'm learning how to practice the wheel strategy. And so, yeah, I'm not actually that familiar with the wheel strategy. Happy Memorial Day to you as well, Lazy One. And Sandy, everybody, cheers to you guys. I got a little bit left in here, but not too much. I had grilled a burger after doing some yard work. I have a motorcycle that I haven't ridden so far this year. I started it up, but I got to change the oil and I got to clean up the chain. But yeah, I just rode it around my neighborhood, made sure it started the battery, got that charged up. And so yeah, it's been a nice day at home. And also I did spend a lot of time going over the charge point chart earlier. And as far as wheeling goes, I'm not exactly sure what that means. So maybe we can look it up. But I believe that just means, buying, whether it's shares or contracts, they go up a little bit, maybe over the course of the week, and then exiting wheel strategy. So that would be with options, or, we could do it with stocks, either way. So the wheel strategy is an options trading strategy that aims to generate income by selling options on stocks you're willing to own. Okay, so that's different than what I thought. And so the breakdown here is that how it works and what to consider when choosing the stocks. How the wheel strategy works. So sell cash, secure puts. So, it's like rather than let's say there's a stock trading at $5 and it's like, hey, but looking at the chart, I could see it coming down to $4, but it's at $5. I don't want to spend $5 per share, but I'd like to get 100 or in increments of 100 of that stock, but not at $5, at $4. And so I could then sell cash secured puts with a strike of $4. And so I would collect that premium by selling that cash secured puts by having that money, that cash in my account securing those puts. So if I sell one contract, if price is at $5, I could buy 100 shares for a total of $500. I don't want to do that. I'd rather buy shares at $4 for a total of $400 per 100 shares. And so I could effectively do that by selling a cash secured put, having that $400 secured in my account, collect that premium so I'd get a little bit of a discount. And if the price comes down to $4 and closes below $4, my cash secured put would get assigned. I would have to buy those shares, which would be at an average price of $4 per share, but I collected that premium, so I'm actually getting them at a discount, and then I'd have that 100 shares. So that can be a nice way to establish positions. And so this is saying to sell cash secured puts. Choose a stock you'd be happy with owning. Sell a put option at a strike below the current market price, $5 in the example I was given, collecting a premium like I was just talking about. If the stock price closes above the strike price, the option expires worthless, and then you get to keep the premium. So that's great. If the stock price drops below the strike price and closes below the strike price, you are then obligated to buy the shares at that strike price. That would be like buying 100 shares at $4 per share minus that premium. Another thing to do if you already have shares is by selling covered calls. And so if assigned, selling covered calls, if assigned shares, you now own the stock. So selling covered calls, this is not correct. The AI here, I guess, kind of screwed this up, or maybe I'm misunderstanding it. But like I sell covered calls, and that's like I have hundreds of shares. I sell covered calls at strike that's above the current price, wanting it to close below the strike so I get my shares back. But if it closes above that strike, then I have to exit at that strike. I have to sell those shares. And so to sell a call option on the shares you own, yes, covered call, at a strike price above your purchase price. So if the stock price stays below the strike price, the option expires worthless and you keep the premium, just like with cash secured puts. If the stock price rises above the strike price, your shares are called away or sold at the strike price. So that can be very dangerous, especially with stocks that can be potentially very volatile, like GameStop, like AMC, like Peloton, whatnot. So that can be kind of risky, but if the strike is above your average, that can be a nice way to collect premium. And then if it does close above that strike, you then lower that risk by selling those shares at a strike at a price that you were happy with. But I was kind of viewing wheeling as, or a wheel strategy as, basically establish a position and then over like a short period of time, week time frame, selling those for, couple percent profit, or, not like tens of percent profit, but just kind of in and out. So you're wheeling, you're rolling it. And actually maybe that's where it comes from. Rolling, yes, repeat. You can then repeat this process by selling another cash secured put on the same stock, turning the wheel. That's very interesting. I just put that together and then, it makes sense. But so I've been doing that with, I believe, some Luminar, with some Neo stock, as well as with AMC, but I've kind of not been doing that as much because I think it could be squeezing and I don't want to get forced out of those shares at a price that is below my average. I do want to trim my AMC position in all honesty, but above my average, not below it. Or, very close to my average if it seems like it's cooling off. I don't know, but just being in that for 4 years, I need a little bit of a break. Because but anyways, let's continue on with what everybody's saying here. So Saul is saying, I like that partnership that ChargePoint recently got with Eaton. Yes, I did see that news. That is some pretty good news, but we'll have to see if ChargePoint is able to continue to hold above 70 cents or so. And then Sandy's saying, sounds fun. I imagine talking about either the wheeling or the day that I was talking about with Memorial Day, grilling, yard work, and motorcycle, but maybe not. Oh, and then over here, I do have this little point there. I had done fractal with Big Bear AI, but I didn't do that. I had actually drawn the fractal based on a log scale, and so I actually remove that. So I'm just going to delete that. And I will then go over these other tickers that were requested. Sandy, unless there's something you'd like me to go over, I'm happy to go over a stock of your request. But I will go over BAH and then Oscar after that. Whoa, Booz Allen. So this is not one that the type of stock that I like to trade. But there was an interesting example that is kind of similar to this that I almost opened a trade on. And let's see, I'm just going to note the ones that I've gone over here. So I'm going over BAH/Wolf. I'll draw a little comparison there, and then I will also go over OSCR. And so, yeah, I'm just going to pop up Wolf here just so we can see. This is, what I was thinking about doing. I decided not to. So, yeah, I mean, I had covered this stock. I had some calls. I got out of them on the pop over here. Maybe, not on the tippy top here. Maybe I got out of my call here. But, I like to get in and out of those contracts. I don't like to be holding risk because maybe gaps down like this happen. And so we can actually see that these levels that I've drawn there did not happen. We did get, a little bit of a bounce here. And I think that was actually corresponding with some analysis from Mr. Chart Norris, if I'm not mistaken. Everybody, nobody's perfect. So it doesn't matter who does the analysis, whether it's me, whether it's somebody on X, whether it's a professional. I'm not a professional. I'm just a real retail trader who likes doing this, is trying to get better at it, and has fun doing it. But with Wolf here, we can see that there was this gap down. And I was thinking about this when it was in the 80s. I was like, man, I could probably just buy some shares or maybe a call contract, get in and out, or probably just some shares, because I think it could be bouncing. And so from, let's say, 94 cents right around there. This went up 82%. In the overnight, it's currently around here. So that's like 66% up from where I could have entered. But, it's very risky. And so I decided not to get into it because I just don't want to spread myself too thin. And this could just continue lower. And so what I see going on with Wolf Speed is downside move, consolidation below that level here. So that looks like a bear flag, and then it could be breaking lower. Maybe it does, though, reclaim that green downtrend, which goes back to the lows over here. And and then maybe, I could draw a trend line here. That got tested very nicely. Look at that. Over here with that low at 82 cents, pierced that downtrend. So maybe that would have been an excellent trade capitalizing on that bounce. But let's also be a little bit cautious about this and try to relate this over to BAH. So from the close on May 21st, so the close here, the top of that candle, price is up to around 153. So it's currently up about 20%, a little less than 20%. So there's some upside potential there. Following this gap down, it's, like a spring or a ball. You drop it, it bounces a little bit, but that bounce may diminish over time, and then it goes lower, so very risky. And so I feel like BAH is very similar to this with the gap down. We'll see what happens with BAH in the future, but you might get where I'm coming from with this, with this gap down, this could be going higher, but it may also not. The overnight looks like it's down about 0.73%, trading around 107. Did close on Friday at 107.79. And I should note that BAH is Booz Allen Hamilton. Not too familiar with it, or not familiar with it at all. But if we do look back over at the Wolf chart, just for a little comparison, we can see that, on this bounce, volume had increased. So that suggested to me that buyers were stepping in because this did, close green. It did go up. So buyers kind of pushed that up. In my view, maybe I'm wrong about that. Maybe I interpret that wrong because maybe it was sellers. But it did go green. It did go up. So that suggests to me buyers. So BAH also green, also an uptick in the volume. So that does suggest that buyers were stepping in. So maybe we could be seeing a bounce. And so just being reasonable from the close, going up 20%, that would be getting to fill the gap. So this is actually not as dramatic of a downside. Came down 16.5% over the course of the day, or from that gap down. So from Thursday's close to Friday's close. down 16.5%, whereas Wolf, a little bit different picture here, was down about 15% on Friday, but from this level up here to the gap down, it was down almost 60%. So seeing a 20% bounce there, you got to put it into perspective. That was a 60% gap, moving up about 1/3 of that. So if we think about it like that, moving up about 1/3 of that gap. So the gap is up here, 128, right around, well, I guess the gap was from this green close up here. That was 129. But anyways, this is about 16.5% downside move. So let's just, rounding to around 15%. A third of that would be about a 5% move. So, just like Wolf gap down about 60%, and it's currently up about 20%. So this gap down about 15%, then it could maybe go up 5%. And so 5% from that close would put price around 113, let's say. So yeah, maybe this could be going up there. So maybe there's a 5% swing there, but I wouldn't get too carried away with it. I don't know what the news was here. It looks like it had to do with earnings. But yeah, this can hang out down below following the gap for quite some time. And I think a nice comparison of that is actually looking at Big Bear AI, that, on earnings, there was a gap down following earnings. This must have been in the after hours. And the gap down was about 20%. So that's kind of similar to the range that we saw in BAH, which was about 16.5% down. How long did it take to fill that gap? Let's see. Quite some time. It has been filled though. So from that date when it had gapped down, it took about 40, let's see, just trying to get that lined up right, 47 trading days or 67 calendar days, so over 2 months. So if this is any indication of what could be happening with BAH following this gap down, it could be down there a little while. So I'd expect no more than a 5% bounce. Good to be managing that risk. So hopefully that perspective is useful there. And then now I will go over OSCR, which has been pulling back down some. Does look like we have a gap over here. So I'm just going to draw that horizontal line based on the close here, which was 1307 on, let's see, what was that date? That was May 6th, just before earnings. So I imagine the earnings were before market opened. We see this gap up and a close up over 30%. And so now what it looks like we're seeing is, there was some consolidation up there, but it looks like we're putting in lower highs, also lower highs with the RSI. So no bearish divergence there. But as you know, there's this green move to the upside going up 5.8% on May 16th, attempting to get back to that high of 1827 hit on May 8th. But we couldn't get up to that level. Volume had diminished. And, there just wasn't enough juice in it. Then we get this big red candle down with increase in volume. And that's down nearly 10% on Wednesday and then cooling off a little bit here. So this is making me think that it could be pulling back to around 13 to fill that gap. But maybe not though. Sometimes gaps are there where retail just kind of focuses in on them, thinking, I'm going to wait to buy the dip at that gap fill, or maybe at 13 being a whole dollar number. Maybe price doesn't get down there. Maybe it gets down to like 13.25 and then it starts to take off. So you never know. And so I should note too that Oscar, this is Oscar Health, ticker symbol OSCR, which closed on Friday at a price of $14.17. being down 1.39% on the day. But in the overnight, currently, it looks like it's up about 4%, trading around $14.75, which if we look at the closing price from May 21st, that was the close on Wednesday of last week, we did see a close at $14.86. The cursor there is 1 cent above it. So let's see if I can adjust that. Nope. Doesn't look like it. So right around where I just moved it. 1486. That's basically, we're trading below there in the overnight. And that seems like it could be a notable level of some resistance because this big down move, why did it stop there? Why did it close near the lows there, but then gap down and, continue to gap down? So looking like a pretty notable fade there. But if we do a Fibonacci retracement, maybe that would shed some light on where this could be finding a bottom. And so I'm just going to adjust this to, let's see, be, pinpoint precisely to those levels. So 1120 is the low, and then the high over here was 1827. So that does look good. If we look over at the proportions, I just have the 786 up there right now, which is below that gap. That would be around 1271. I imagine it has surpassed the 50% retracement, which was at 1473, and with it at 1475 in the overnight trading. Maybe it's going to be getting rejected or hanging out around that level. But since it has broken below, where is the next level that it could be going down to? That would be the 618, which was at 1390. And actually the low on Friday was 1396. So nearly getting to that 618. So I'm actually going to remove that 50% level and think that, it is quite possible that effectively this 618, where it's currently at, which is, now right around that 50% level, maybe I should leave it up there. Maybe I'll remove the 786, just knowing that it's below that gap fill. But I think that this could be the retracement that, we're looking for before it does continue to the upside. But it could also hang out down here for a little while. And I also don't know anything about the company. So, good to consider that. And, right around $14, maybe it's going to find some support there. And if not, gap fill around 13. Anybody who is buying here, maybe they would, buy back if it did come back to there. Because they were kind of, anticipating we could actually do this. This might be interesting. Fibonacci extension from the low here to this high, and then to the low that followed it, the 100%, 1618. Not 100%. I'm just going to make that light blue so we can differentiate it. So we can see the 1618 is at 1639, did go past that, but did we go up to the 2618? Not quite. That was at 1876. That would be called being greedy, expecting price to go up to 1876, unless it did during the pre-market or overnight trading. But during market hours, the high was 1827. So that 1618 was a good level to be considering and seeing this consolidation here. And then ultimately this move down. Kind of tough to tell that would be happening. I would not have expected it, but it's really just like this big green candle move here wasn't backed by that much volume relative to what was seen over here. So that's just kind of a sign that it's looking a little bit exhausted. That 1618 was at 1639. So and then let's also just see what the 100% level is at. That's at 1493. Hopefully that's helpful. But I think 14 to 13 could be some accumulation levels, but it may take a while for it to actually bounce to start going higher. But I don't see anything else in the chat, and I've got the list of everything that I've gone over down here. So what I'm probably going to do is end the stream. It's about 23 minutes after the hour. And so I'm just going to throw this up. If you did enjoy this content, me sharing my thoughts, make sure you like the video, share your thoughts in the comments down below or in the live chat when I do these streams, and make sure you subscribe to the channel for more videos like this. I will be doing another overnight market prep tomorrow at 10 p.m. Eastern, going over the usual tickers, which includes the volatility, S&P 500, Bitcoin and Ethereum, and then I'll do what ever stands out to me based on what happens on the day. Usually I get more excited towards the end of the week, but this week is seeming to start out pretty exciting with Peloton, GameStop. Also AMC, maybe I'll just throw up AMC at the end just because I'm kind of curious to see what's going on with it. It was up higher in the overnight. Currently, it looks like it's up 1.85%. If I do flip over to the 10-minute time frame, it did go up to $3.40, but it has, as you can see, it pulled back some. Just up 1.85% in the overnight trading at around $3.30. If we look at the daily, the high on Friday was $3.34. So yeah, I mean, I think that this is looking really good, but once we get up to $3.68, that is where we raised capital before. So I think there could be potentially be some resistance there. That's why I kind of added this yellow doodle. But ideally, not even necessarily ideally, but hopefully we break past that. Ideally, we break past that level, 368. But I could see us finding some resistance around $5 to form this inverse head and shoulders pattern. And that would put, the formation of that right shoulder coming to, September, somewhere around there. So maybe we do get, a pullback around $5. But if we blow past, like if GameStop's going parabolic, maybe AMC is as well, and maybe we see this get into the double digits. I have no idea if that is to be the case. But yeah, I mean, it's nice to see AMC above that yellow downtrend that I've been following for a while. But yeah, as always, this one's pretty risky. And, to be honest, I haven't really been that impressed with Adam Aron's execution with the company, considering that he has all of this retail input. I do think that it's nice that he's taken our ideas like popcorn, like the candies, perhaps doing some beverages, like alcoholic beverages in AMC's. But yeah, I mean, 4 years of retail just piling money in there. It just seems like we're still, struggling with debt, even though we have time before we pay it off. It hasn't changed fundamentally. There hasn't been a fundamental shift in the company to make it better positioned like there has been with GameStop. So I have less conviction in AMC than I do in GameStop. But yeah, looking forward to it. Hopefully it gets to double digits later this year, maybe in June, who knows. But yeah, those are my thoughts. Thank you so much for hanging out. I will see you tomorrow evening for the next overnight market prep. It's going to be an exciting Tuesday and an exciting short week. I hope it's a great start to the week for you.